Good evening, everyone. Welcome to today's panel, and thank you for the introduction. But just to give you a quick introduction, a little more in detail, I'm Ashmita Das, one of the lead business consultants with Probe Group. Today we have in the panel James Civic, who is the Director of Business Development at Ekata, which is a MasterCard company, and he comes with 10 years of experience in e-com, fintech, and payment space. We have Matt Bowen, who is the VP Digital Identity at MasterCard, and he leads the product development and enablement of the identity services in the Australasian market. And lastly, we have Michelle Henderson joining us all the way from New Zealand. She's the head of brand at Immersive, a pioneer in Web 2 and 3 payment platform protocol. So welcome, panelists. And the topic for today is striking the balance between identify fraud fighting and seamless customer experience. So to start that, we all have witnessed how the consumer behavior has changed over the past decade or so, thanks to all the social media and some of the tech pioneers like Uber, Netflix, to name a few. We have been spoiled with their seamless customer experience. And if not equal customer experience, but the requirement, the kind of customer experience that we expect from any online platform, that has kind of raised a bar. And that is where companies are working more and more every day to improve their customer experience, but also understanding the fact that with the increase in the digital data, there has been an increase in data phishing, data frauds, and which has led to a lot of scams and frauds. And that is where the companies are now tasked with not only taking care of the customer experience, but also finding ways to safeguard their data and also prevent fraud. And with that thought in mind, let's hear what our panelists have to say on the first piece of the puzzle, which is on the consumer behavior, how it's been evolving every day, and what is going to emerge out of the Web3 and how the companies are kind of working towards it. So James, if you would like to start.
Sure, can do. So I suppose the main thing for me is big convenience. Users expect more and more convenience. People in the industry will talk about frictionless, but the reality is, yes, people expect it to be very, very quick moving, but they expect it to be at their convenience. If something exposes their security or exposes their identity, if we're talking about identity perspective, that is very, very inconvenient to them. No one wants to go through a data hack or lose their identity or anything like that. So convenience is really the key perspective here. As well as that, I suppose everyone wants a personalized experience, which is always a little bit interesting because people want to talk about privacy, and they are very much more aware of privacy at the moment. So they want to ensure that they have that personalized experience, a dynamic experience that is centered on them because it's the convenient perspective. And that's not a trend that's going to go away in the next whatever. I'd be very, very surprised if anyone says, yeah, I want to be blocked at every single transaction I ever make or every single digital interaction I ever make. So that one mainly.
Yeah, thanks, James. Look, I totally agree. I think every consumer is looking for a frictionless experience. We all want to deliver that. We all want to make things fast and easy and convenient. And I think, though, that often when we're building a product or a business or a fintech, sometimes that's often when we think about what is consumers' expectation. That's kind of where our thinking stops. I love that talk before about ESG. You know, how can we think about that as part of our proposition? But I also think about trust as well. And it's not just about product trust. You know, does my product add value for money? Does it do what it says it does? Can I show to a customer that I've got good reviews and testimonials? But I think a lot of it is about demonstrating to consumers that they can trust us with their privacy. They can trust us with their data. And if we're a fintech business, well, we better be showing that we're trustworthy if we're dealing with people's personal information, if we're dealing with their financial information. And so I think there's lots of awesome, I can see with a lot of fintechs, they've got this great narrative on privacy and trust. But there's plenty of others that, you know, they kind of just talk about security, they slap the badge on the side, they say, you know, we use bank-grade encryption and our privacy notice is kind of hidden out the back, and we don't really promote, you know, the quality of how we think about your privacy and data enough. So I think the best businesses in the future are the ones that talk about that well. And I think organisations like Apple are clearly very good at that. You know, whether you think they do it for a business imperative, clearly they love talking about privacy and data. How were their products, whether it's not tracking you as you use the maps, whether it's not tracking what you watch on TV if you use Apple TV. You know, clearly those products, part of their narrative, their product speak, their marketing, is about how they can be trusted. So they talk about it, you know, they show it, and they really mean it. And I think the better organisations will be good at talking about how they not just do the right thing, but be very good at talking about how they do that well.
Coming from the community management side of working at Immersive, a lot of my role is Web3 and Metaverse. So I really wanted to focus mostly on the personas of who the Web3 users are. So 74% of all of these users are male. 50% of those people are below the ages of 35. And most of these people are involved in either gaming, GameFi, decentralized finance, or holders of crypto. So the main thing for the Web3 users is privacy, mostly. So if you look on LinkedIn, you know, you'll see a photo of someone in a suit or a headshot, whereas the Web3 users mostly are representing themselves as avatars or NFT pictures or cartoon versions of themselves, because self-sovereignty and identity is really important for them to protect. And I think that's one of the main key stages of, you know, making sure that people aren't getting scammed because all their information isn't out in the open. You know, they can control what you see. So whether that be digital assets, you know, information, anything that's private, you can kind of decide how you represent yourself. So a degen, which we call in Web3, degenerates, it's like the new age kind of users, they won't be using their government name. Like, I'm Michelle Henderson in real life, but the way that we represent ourselves online in the future will be a little bit less, you know, my username is Miss Bear NFT. It's not Michelle Henderson, so I think it kind of goes all the way back to that. If you're pro-privacy from the very beginning, it's going to be easier to protect yourself from scams and frauds to begin with.
Thank you. And Michelle, if you would like to just, for the audience, give some bit of detail, what is the difference between Web 2 and Web 3?
Yeah, sure. Yeah. So the difference between Web 2 and Web 3 is it kind of comes all the way back down to the tools and the new age technology that we're using at the moment. So an example would be Web 3 crypto wallets, such as MetaMask. I'll use that as an example. So a lot of this kind of goes down to DIDs, so decentralized identifiers. So instead of, you know, say going onto the internet and logging in with your email address and a password, you know, if you're anything like me, you probably forget all your passwords too. I think the global average is 100 usernames out there for each internet page. So these days you're going to be logging in with one authentication code with your Web3 crypto wallet, and that will be able to be seamless with every website that you use. So it's just one login, and I think it just keeps it a little bit more private when it comes to what you're sharing. So yeah, you control your own data sharing, basically. Yeah.
Excellent, thank you. Pretty thought-provoking Web3 is, and pretty exciting as well. So now talking about the second piece of the puzzle, which is fraud detection, and what are some of the trends that we have been seeing in terms of what's happening, how, what kind of frauds are happening, and how the fintech, especially in the fintech world, how the companies are basically preparing themselves for prevention as well as to tackle them if that happens.
Take this one?
Yeah.
Look, I think fraud, as always, is evolving, and you know, I think we're seeing that bad actors are continually finding ways to attack businesses, whether it's money laundering risks or fraud itself. Interestingly, in the past couple of years, we're also seeing some of that, the threats migrate, unfortunately, to consumers as well. So, you know, as businesses continue to invest in fraud detection and decent capability, and more of that gets out there, unfortunately, it's exposing some individuals as well. We're seeing Scams now probably underreported at $2 billion of loss for consumers. The latest stats were affecting about 4% of the population have fallen victim to a scam. And so there's no victimless crime, but whether it's business or individuals, it's everything is, of course, on the rise. And I think Michelle talked about how do we protect against identity theft. We're just seeing this proliferation of data. Data can be good, can be used for good purpose and used for evil. And so I think when we start to think about privacy, protection, we want to make sure that it's harnessed for good and kept in the right hands. I think the bad news for fintechs is that, as we'd say in elections, there's no such thing as a small target. I think when it comes to fraud, if anything, the bad actors are targeting organisations who, in a way, are emerging with their best practice for their financial crime or their credit assessment capabilities. And so, we had a customer, not that long ago who, they launched on a Monday morning, opened up the website, and by Monday afternoon they're already receiving, spurious and suspicious credit applications, and it really surprised them, right? So, I think, again, no such thing as a small target. But the good news is that, and it's something we've worked at MasterCard to really kind of make all fraud detection capabilities more accessible. It's not just the realm or the remit of the big end of town. I think we see this with what we try and distribute to all of our partners and customers. We see this with innovation in the fintech community around whether it's orchestration or outsourcing of AML. Organisations like First AML or Lab Group are really contributing to that, to that confidence and trust, and to the smaller players in town providing that set of capabilities they need. But it's both technology and human talent that is what's required. But no easy answers. But I'm optimistic about the future when we think about whether it's Web3 and capabilities to help better protect users, or it's more in the now around the progress of digital identity. I'm confident about the future.
Thank you, Matt. And just to add to that, I had another question, which was more regarding, so MasterCard, all of us in some shape or form, we have used MasterCard. And what I've seen is when you're using a card, and especially if there has been a fraudulent transaction that has happened and that exceeds a certain amount of dollar value, the cards, they generally get automatically cancelled or disabled. But more from a banking standpoint or more from an insurance standpoint, I've also seen that, when you're kind of logging in or signing up on a site, on a bank, creating your own account, sometimes it can be really annoying when you have too many times when you have to fill in the one-time password or re-authentication. So how do you kind of try to balance that? How much authentication is right versus the customer experience to prevent any frauds? Yeah.
I can't say from all the bank perspective, because the reality is every single institution will have their own flowcharts. They'll have their own user interactions they want to go through. The reality is that, exactly as you say, too much authentication, too many OTPs, anything like that is an annoyance. What Matt says, you want a trusted environment. What Michelle says, once you get into Metaverse Web3, you're using those tools, you should be never really exposed to it. There's a range of different ways you want to go through, and as I kind of said earlier, users want that convenience. They want to be treated as an individual on every single time, and they want it to be convenient to them. So it shouldn't always fall to what should the consumer do. It's what should also organizations do to take it upon themselves to protect those end users. That makes them a trusted entity that you will interact with if you are the consumer. So whether you're doing certain things like running collaborations with other people in your network to try and necessarily stop the fraudsters, but understanding the probability of whether someone is likely to be who they are. So then if someone has had their identity stolen or credit card stolen or something like that, what are the ways that you can detect through other interactions? It can be the way that their identity is behaving online. It can be the way that they are interacting with a device, a session ID, doing device fingerprinting, anything like that. So there's a few different ways that you can kind of do it, but it's ultimately up to every single one of the institutions to want to implement that change. And that, especially for some of the more traditional institutions, that's quite large. Matt said, we heard it so many times globally. Someone launched a new product. As soon as there's a change, fraudsters know about this before anyone else does. I don't know how they do it, but they are well ahead of it. So if someone's launching a new product on a Monday, the fraudsters somehow know about it and are able to take the system offline sometimes by that afternoon because they hit it so rapidly.
Just to add to that, Ash, though, you just talked about MasterCards at the start, and when I was talking before about trust, a lot of that is, who do I go to when something goes wrong? And we can't sort of play around with this, too much, right? We're looking after people's financial, not just their information, their personal information, and their money. And so I guess one of the things we're proud of in the card space is that people have a place to go when something goes wrong. It's why they have confidence and trust when they use a card. And I think when we think about, what is the recourse when someone loses their personal information? What is the recourse when someone bank transfers money to the wrong person in a scam? What is the recourse when I lose my crypto key and I've lost my wallet? Those are times when consumers first, they don't think about it until something goes wrong. And so we have to, whenever we want to digitise something and make things faster and easier and more convenient, we really got to think about those controls and think about how are we going to provide that confidence and trust, and how are we going to look after people when things go wrong.
Excellent. Thank you. And about the next thing that I wanted to quickly touch upon was, so we are looking at how the companies, and from what I understood from the conversation, was some of the businesses which have stayed, which are like a few decades old, they already have certain technologies behind running it, and they believe more in not in a prevention, but more of a fixing after the fraud occurs. They are going that path. So do you think that with the emergence of FinTech and the new companies coming up, and with the new technologies which are coming up, it will be more proactive in nature, that we are safeguarding the data and avoiding or preventing the fraud before it even happens?
So I think I said before, we're just in this world of data. So if we think about what are the failings of KYC, today it is that we ask users to share a lot of information. It's not just about social networks, but when I open a bank account, it's not just my name, address, date of birth. I have to collect a lot of data like a driver's license, a passport, a Medicare card, a birth certificate. And often, we see that people ask for all of those just in case. Hopefully we get a match at a credit bureau with a government authority, and sometimes we don't even need that information. And the problem is that it's still a probabilistic approach. The user's not in control of that information. In fact, my 9-year-old son can take my wallet and probably open a bank account in 99% of the time with that information. He can sit at the keyboard and be me. So we have this fundamental problem that people aren't in control of their information. And they're sharing a lot. So a lot of data is getting out there, it gets hacked and breached, even if you trust that organisation, it gets in the hands of bad actors, and the data can be replayed by someone else, and it's a vicious cycle like that. So we have to kind of flip that paradigm, I think. I don't know if it's a perfect analogy, but it might be helpful in this room. Like with open banking, we have this concept of a data holder and a data recipient. We have a concept of authentication with the place that it came from. And we have a very sort of defined workflow about how it should get to the place it needs to go. And more importantly, I can leverage trust that I have with somewhere else and bring that to the place that I'm going. So again, with identity today, I'm starting from scratch. When I go from bank A to bank B to the next telco, I have to pull out my documents and start from scratch. So it's inconvenient, it's data poor, it's privacy poor, and the fraud is still there. So I think if we think about digital ID in a sense where consumers can have a place of trust, it might be the federal government, maybe we like our MyGov ID, maybe we like our Australia Post ID, maybe it's my bank ID, maybe it's a telco ID. All of these places, it turns out about half the population already have a reusable digital identity. We just need to unlock the ecosystem, build that interoperability, and build that acceptance. And if we get that right, we're sharing a lot less data, it's under our control, and we can fix some of these fraud outcomes for both our businesses and for consumers.
Excellent. Thank you so much. Any other points that you would like to add, Michelle or James?
Yeah, sure. So at Immersive, we are basically building the world's first decentralised credit card for the metaverse, so physical and virtual. So as you were mentioning, with Web3, you are your own gatekeeper of information, data, and assets from the very get-go. So all of this is done through private keys that you sign every transaction that happens. So as you mentioned, if you lose your physical card in today's world, it's got all the data on the front, it's got the numbers, someone can just easily go and, drain your account, and then you'll have to fix it later. Whereas you are signing for every transaction, whether that be in person, once we have our physical card built, as well as online as well. So if our website gets compromised, the transactions will automatically stop. So when it comes to fraud, because you are the owner of all your details, none of that can be compromised, and then there'll be no back and forths, saving time.
Yeah, I think it's probably a bit of both. You talk about traditional FIs, and the reality is that they've been around for decades and they still can't get it right. So you need to look forward at ways you can do things like this. Matt mentions that with federal government, you've got some kind of data sharing that's in the middle. The reality is that you look to the latest generation, they don't have that same level of trust in government that older generations do. So when you're looking at Web3, people have their own identity. They trust themselves to look after their identity more so than, especially government. You've seen it with New Service New South Wales had their driving licence breach earlier this year. So 70,000 driving licences, people had their details hacked. But that's not through the fault of the user itself. Now, it's difficult because phishing attacks happen. I received a text this morning saying my Netflix subscription will be cancelled. Please click on this link. Unfortunately, I didn't click on it, so it's all okay. But that does happen. People make mistakes. So the reality is that new solutions need to be looked at, not just trying to reinforce those old solutions, which can happen. And yes, if you're looking at biometrics, that's very, very a good way of doing it. It's very, very locked down, but every single time you want to do like a minor transaction, do you want to go through that biometric? Not necessarily. Sometimes when you go onto these new technologies, people have that trust in your environment, and they have the trust in themselves. So really these traditional FIs and traditional companies in general do need to be looking to the future to try and embed that into their tech stacks, really.
Excellent, thank you so much. And just in interest of time, I would like to ask the audience if you have any questions for our panelist. Any questions? The fight or the balance between fraud identification and customer experience?
I think so. I think people are coming in.
Thank you.
I think we have one question. Right at the back.
Thank you. It's Raymond here, and I'm building a travel-ready app, and ID management is really, really key. We've heard about pros and cons and different models and whatnot. Could you share any best practices with us in terms of how to manage this?
For helping consumers manage an identity? Is that what you mean? Or?
Identity management in general, in terms of, what I'm observing right now is there's so many handover points, so many points of repetition in terms of data and all that you've covered. Someone sitting here trying to set something up that's very much CX-led. What's the best practice? I know that line's not necessarily a hard line, but there's certainly, I guess we've got the best brains sitting on that podium there, just looking to get the benefit of that.
Yeah, I think probably touches on all the points that all of us have made during the discussion. I think you've got to make that initial experience amazing, right? You're in a competitive marketplace. You've got to spend all that money finding a customer, getting them to your website or to the App Store, and then you want to make it easy for them to sign up. So the minimum amount you need to trust them is what you want to collect up front. And as you begin to interact with them, begin to engage, you can maybe collect more. You can do that either kind of passively, about how they use their device, how they interact with their device. And there's lots of ways, both passively and interactively, you can continuously authenticate, who they are, and is that same person who signed up the one that's using your app. I think that's the way to treat it, is that, building an engine that, not over-engineered, but is simply saying that for the amount of trust that we need, we can continuously understand who they are. And if they do something high risk, if they're redeeming travel points or making a payment, and if it looks a bit suspicious, well, you've got ways to step that up. And it might be biometrics on the device, like the new FIDO capabilities. You might use something more sophisticated. But to me, it's about, as always, getting that experience right for the risk appetite that you have with that customer.
I'd also say on that, you can build at levels of incremental checks, or to go with what Matt says. So, especially as you build platforms out, can you allow people on with a minimum amount of checking? So that can be ease of use. You look at apps that allow, they just need an email address or a phone number to sign up for. As you then start to unlock more and more interactions or services that you require, do you have to go through some kind of another level of step up? So that type of step up authentication. The reality is that you need to make dynamic flows for everyone to go through. So based on certain risk scoring, what your appetite is, what the product can be, if you're redeeming loyalty or whatever, to put people through these different dynamic flows, which then satisfy both yourself, but them as well. And then if that allows them into your ecosystem and you allow them free reign, how do you then passively authenticate them? Are they going through an actual key every single time? Are you able to monitor things such as a behavioral biometric? It can even be, you see, I come from more of an e-commerce space occasionally, and people spend thousands of dollars every single year on UX in terms of where is the checkout cart placed, or how many clicks do you have to go through to actually get that experience done. So letting people onto there and understand that experience is quite key, and something that people are always trying to improve on.
Do we have any other questions?
I'm going to ask a quick one, Ashmita. Guys, I come from an era where we used to write a check and you'd wait at least 3 days for it to be cleared. Are we going too fast? We're now in an era where it's pay to, where we can do instant payments left, right and centre. And I was thinking about the other week, the story of a certain cryptocurrency exchange which accidentally sent someone with a fat finger trade $10.5 million when it was supposed to be about 100. Took them an audit and several months before they discovered it, and they're having some trouble getting it back now. Is there a way that we can kind of slow things down and maintain that customer experience and authenticity at the same time, so that those human mistakes that we all do make along the way can also be moderated as well?
I think the short answer is there are trade-offs with everything, and we love instant payment. We love fast transfer of money. And the problem with money is it moves very fast once it's out of our hands. And that was the same as cash as it is with things like real-time payments. I do think there are ways to improve. Part of it is about education. Part of it is, how do we protect the most vulnerable members of our community from scams? In a sense, education is sort of it's avoiding the issue to some extent, and I think we need to be more thoughtful about technology and have we got the balance right, and are we doing the right thing by people? Have we got the right experience in place? Is this good enough for my family? Can my mum understand this? Is it good enough for her? So I do think there's a lot more to think about there with respect to the movement of money and have we got the protections in place. Like I said before, I think in cards, people understand and appreciate some of the recourse, and I think there's lessons to learn when we think about other ways that money can move.